So now that we've looked at some entry points as a bull or a bear, and we've also looked at some bad entry points, we're going to look at targets and where to sell. Now, a lot of people, this is one of their weak points where they hold on to the trade too long and they either give back profits, or if they sell too soon, they leave profits on the table. Now, we need to establish that there is no such thing as a perfect trade. You are not going to buy at the bottom and sell at the top. There's always going to be money left on the table or a better entry opportunity. So we cannot get caught up in that. If you have your game plan for the trade established, you make your entry, you make your exit, you get the target profit that you were looking for, and then the stock keeps continuing to the upside. If you get caught up on that and lament and look back at it, and you're saying, oh, if I held longer, I would have gotten X amount of dollars, that's really just a waste of time, and it's important to stick to your trade game plan, execute that game plan, and then move on and find the next trade. And again, getting caught up on not making the perfect trade is going to lead nowhere. So for targets, where to exit as a bull, and we know resistances, we've already looked at where to identify them. They are at moving averages, previous price history, or psychological levels. You want to exit before those resistances are hit, or you could wait until those resistances are tested, and then you would exit if the price is unable to get above them and it's rejected from those resistance points. And a third place to make a exit as a bull would be when a key support level is broken if you're riding a trend to the upside. And just a reminder, this is something you need to be asking yourself when you're entering the trade, but it's, is the trade worth it? Will my dollar or percent target for the trade be hit before the next key resistance? And that's an example. Let's say I'm waiting for the 50-day moving average resistance to become support, and it finally does. But if we have the 200-week moving average resistance just a 0.5% above that 50-day moving average resistance, there's not going to be much upside before encountering a major resistance, and the risk to reward will not favor reward in that specific example for the trade. So let's now look at some examples on all of these: moving average, previous price, psychological, resistance levels, where to exit, and I'm going to give some insight into my decision making and thought process while I'm looking over a chart.